All right, everybody, welcome back. Forex trade of the day and portfolio breakdown. That's what's on the menu for us today. And I really want to start with the trade of the day as far as the trading opportunity we're looking at right now is Euro versus the Canadian. And that might sound familiar because last week we were dropping hard with the Euro Canadian as it was starting to pass through the last line of support, 48.11. We actually we dived in head first and started to chase that downside move. It was a lot of negative momentum there. And as price action began to pull back up, showing that spike at the end of the week, we felt we've did enough. We jumped out and took the back seat. But here's the interesting part. It had an equally violent opposite counter move back up, where it's now cracking back above 48.11. And that counts for a massive upside reversal indication. Reason B is where we filter out excess noise coming from the weekly chart. And we do that by switching to the monthly chart. That's the highest authority. And by the way, we're only a few days away from an official close on the monthly bar. And guess where that monthly bar is going to close? I have a strong feeling, very strong feeling, it's going to close above 48.11. There's a reason it came back all that distance just to crack back above. So let me switch to the monthly chart. We'll show you how that looks like from the monthly perspective. Check it out. Huge spike, right? Also known as tail, slicing through that 48.11 and the pull back up, and now price action trading inside. So we're mostly referring to the black system. This black support and resistance system looks like it wasn't really breaking below 48.11. It was a false breakdown because we see that pullback happening right before the close of the monthly bar. So given the fact that it's going to close inside and it's just a few days away, we'll have a very strong indication for an upside reversal and back to where price action came from. And you see where it came from. It came from 51.50. So there's quite a nice move ahead of us, potentially speaking. Of course, we're talking about 350 pip to go back to 51.50. And again, as long as it stays above by the end of the month, there's a very strong indication that we're going to have here an upside reversal. Now, are we going to be waiting for the end of the month to take action? Absolutely not. The fact of the matter is, the current situation we're in right now is good enough indication for me to get involved, right? So we're going to jump in cautiously, right? So we're not going to start off with a big size position, but rather a small size position just to have some skin in the game, so to speak, right? We want to establish that position, start small, and as long as price action keeps pushing forward, and then we're going to get that monthly close confirmation, that's when we're going to get more aggressive. So we're going to get more aggressive once price action starts to pass through 48.90 and get even more aggressive when price action starts to cross above 49.71. That's the bulk of the move that we really want to hone in on. All right. So without any further ado, let's go right ahead and push that trade right in. We're going to start off with 1K. Stop loss level is going to be at 147. And we're going to be targeting 150, 150, right? 150, 150. That's going to be our primary target and potentially final destination. There you go. We're in. Now, I want to switch over to the Forex market portfolio breakdown. So aside from the Euro Canadian, we just pulled the trigger in. We have 3 active positions that we carry for quite some time now. The oldest one would be the Aussie Swiss franc. Aussie Swiss franc have done something quite remarkable. And by the way, we can link this one to the Euro Canadian. From a correlation standpoint, the Aussie Swiss going up usually triggers Euro Canadian to go down and vice versa. So they behave in a high correlation, but inverse high correlation. So one goes down, the other one goes up. And we just analyze the Euro Canadian. We see a lot of upside potential, which doesn't surprise me, right? Aussie Swiss franc has a lot of downside potential. But it started off with price action starting to pull back from 57.64, and we started to notice that spike starting to show up. So it was clear to me that pricing is not going to be able to really break out above 57.64, but it actually failing to cross over, so it would probably turn back down and continue the move that it started off last month. So from that perspective, right? Now look at the price action. As it was coming off, we're talking about 3 days ago, and breaking below 57.64, that was our cue to jump into short position. And you can see exactly how it did that. As it was crossing below 57.64, closing the daily bar below, we pulled the trigger the first time. Very shortly after, we felt confident because price action, which that was yesterday, started to come up just to test, slightly testing that 57.64 from below, checking up on it, making sure it's solid, switch to being resistance, and it did because it started to back off. So that was a clear sign that we probably on the right track. We pulled the trigger the second time, doubled up our position size, and yeah, and just sit back, relax, watch price action starting to gain some negative momentum. And as it did, you can see what we did today at the beginning of the daily session, pulling the trigger the third time. So we've been tripling up ever since the inception, the first trade we fired off. Now, I think price action has a lot more downside potential in the pipeline here. I think it's going to make contact eventually. Could take a few days, maybe even a week. Make contact with 56, 53. That's a massive support key level. The price action missed by a tiny margin back in late October. Closest it got was 56.57. That's 4 pips off of that key level support. The fact that it missed it, went straight for an aggressive technical correction, and now it's coming back, tells me that it wants to finish up the job, solidify a touchdown with that 56.53 level. For us, we rounded up a little bit, so the official take profit level is 56.54. So as long as price actions remains on the back foot, we'll keep throwing in more trades into the mix. So that's Aussie Swiss franc. We already registering a nice profit on it. The second one is pound Japanese yen. The minute pound Japanese yen broke below 194.29, that was the big reference point for us. That was the big trigger level. We started to fire off trades. The first trade that we fired off is already closed. It had such a nice profit on it, we had to take it out. But we also pushed in the second trade a couple of days after the first one, and the third trade just today, and that's going to be the last one because we're closing in on target is 190.30. There's not too much meat on that bone, which is why we're going to keep it as is. These two trades we're going to drag all the way to the finish line, right? And that's coming. Stop loss level was also adjusted as you would expect. We dropped it from 195, which was the original stop loss level, now at 193.75. So that's good stuff. Last but not least, the twin brother of the pound Japanese yen, if you will, the euro Japanese yen. Where here we still have quite a road ahead of us to the target, right? Quite some distance to the target. We're talking about almost 300 pip to go. But we already smashed about 200 pip in the back pocket already. And we did have two trades here. One we decided to take out today just because price action just snagged the previous low from 3 days ago. And that area is usually a natural support area. So I wouldn't be surprised if price action is going to pull back a little bit up. And if it does, that's going to be an opportunity for us to throw in that same trade that we just took out today. But again, 300 pip to go, long way to go. This position is going to stay open for quite some time. That's my guess. Let's take a look at this from the weekly perspective. I think that gives us even more confidence to pursue this bearish campaign. And I'm talking about the way price action was able to close the weekly bar last week below 161.58. 161.58, that's our trigger level. That was the breaking point, right? So price action managed to secure a close on the weekly bar just below that area, and that gave us the confidence to pursue this bear cycle. Also, this week, you can see how it started off on the upside, went straight up to test that 161.58 from below, right? Tried to penetrate, failed, right? Pulled back down, turned negative, and that was a strong sign the price action is indeed on the track towards the previous lows. Now I say previous lows, we're talking about 154.40, 155. Having said that, there's a massive key level support coming in at 156.59. We've rounded up to 156.60. And that is our official profit target and potentially final destination. So there you go. 3 active trades, Forex market portfolio breakdown. We just initiated the 4th one, which was the Forex trade of the day, Euro Canadian long position. That's all there is to it. In a nutshell, giving you on the silver platter. Hope you enjoyed that video, guys. Wishing you a nice trading day. We're going to be back tomorrow as usual. So till then, be well.